Look, anytime we're in a seller's market, a lot of times the appraisals are gonna come in short. And we saw this in the last real estate recession, the 2006, 2007, 2008, where it was a seller's market, the prices were high, and appraisals just couldn't keep up with that demand. You see, the demand for houses is so high, and there's an abundant amount of buyers for these houses, and the properties are going into contract so quickly that the closed comparables are just not closing in time for an appraiser to actually use those as legitimate sold comps, which is why a lot of appraisals are coming in short. So as we're experiencing in 2021, if you guys are in the real estate market, I'm sure you guys are experiencing something like this. And look, if sellers want to sell and buyers want to buy, then all parties must work together. And I got some tips for all parties in terms of if an appraisal does come in short. Look, an appraisal, all it is an opinion of value of a licensed property appraiser. They're going to look at active comparables and they're going to look at sold comparables to come up with fair market value for a property. If an appraisal does come up short and both parties feel that the value is there, then both parties can work together in terms of contesting that appraisal. Now you guys can work together and reach out to the lender and explain to them that you guys are contesting the appraisal because you do not think that the comparables that were used in that appraisal are the best comparables to come up with fair market value for the subject property. And understand something, appraisers are humans and they do make mistakes. And in many cases, buyers and sellers are very knowledgeable about the market and the market data because they've been studying it religiously because that is the area of concentration for them, whether they're buying or selling. So if you guys do end up contesting an appraisal, two things must happen. The first thing is you must have better comparables to utilize when you guys are contesting the appraisal, and you guys want to make note of why this comparable is a better use of a comp than maybe another one that the appraiser used. The second thing is you want to dissect the comparable that you guys are using and add or subtract certain valuations from the property, from the comparable property, to make it relative to the subject property. So for example, if the subject property is say a half acre larger than all the comparables that were used, and you find a comparable that is the same size in terms of the land value, so then you guys can really back up your case when presenting your new comparables that you're using. But let's say the appraiser did everything that they could do to get the right comparables, and you guys just cannot find another comparable or comparables to contest the appraisal, and ultimately the value is on point that the appraiser came up with. Then you guys could do one or a combination of the following. The first thing is the seller ultimately comes down to the appraised price. This does happen a lot of times. Let's say a property is in contract for $220,000 and it appraised for $200,000. That's a $20,000 spread. You get the buyer, you get the seller essentially to agree to the appraised value, and they'll actually come down the appraised value. The next solution is the buyer and the seller agree to work together. This is probably one of the more prominent situations that we've had as a real estate broker in dealing with a lot of real estate transactions. So in that same example, let's say the property appraised for $200,000, the contract is $220,000. Then you get everybody to meet halfway in the middle. Say the seller comes down 10 grand and the buyer comes up 10 grand. Now, something to understand is the buyer has to offset that 10,000 if they are coming up above appraised value. So that means they're gonna actually have to come out of pocket with an additional $10,000 at closing to offset that increase. The next thing, and we do see this a lot in this market as well, is the seller is ultimately staying firm on their price regardless of what it appraises at, and the buyer comes up with the entire difference to offset the appraisal. So in that same example, it's a $20,000 spread. The buyer has to come out of pocket at closing with the $20,000 difference to offset the appraisal, and they move forward to closing. And the other thing is the seller remains firm on the price and the buyer ultimately walks because they don't want to pay over appraised value, or financially they just cannot come out of pocket with the difference to come up at closing. Now, if you guys guys are in the market to purchase real estate, be sure you get with a real estate agent and attorney, and you want to have specific addendums. Like in the state of Florida, on our Florida contracts, we can actually have an appraisal addendum to protect the buyer. So if the property doesn't appraise, it gives the buyer an additional out. Now, a seller in today's market doesn't necessarily have to agree to that addendum and can remove that addendum in their negotiations. But it's always helpful to have an attorney or a real estate agent helping you guys making a decision and writing offers. If you guys have been watching this channel for a while, you guys understand that I'm a big believer in not over leveraging, becoming financially responsible, financially independent, living below your means, and ultimately becoming financially free. And if you guys want to learn more about financial freedom, I've got a really good video that I did several months back that you guys might want to check out, where it really does break down all the different ways of how to become financially free in a quick period of time. Check out that video next, and I'll see you guys there. Thanks a lot for your support.